Hello and welcome to the special series where we are covering the Mint's Investment Summit on the sidelines of the panel. I'm in conversation today with Mr. Vivek Gupta. He is the partner and head of PE and M&A at KPMG India. So Mr. Gupta, welcome to the show.
Thank you.
Quickly I wanted to ask you about what is actually a unit economics?
See, in the context of venture capital investing, unit economics plays a very important role. Essentially, venture capital invests in early stage companies. So at that point in time, they have to develop the conviction that the entity in which they're investing has economics at a unit level, which can then be scaled profitably. So the call I'm taking is obviously at the time that I'm investing in an early stage company, that company is investing and therefore in losses. I have to be convinced as a venture capital investor that I'm backing the right horse, in the sense that company must have the right unit economics so that when it scales up 3 years later or 2 years later or 5 years later, it will finally deliver a profitable and valuable business model. Right. So that's the concept of unit economics.
Right. So, in India, what is the scenario like? Of the panel we were discussing about how the scenario in India is about the valuations and not the right market scenario. Could you elaborate on that?
So I wouldn't say that it's not the right market scenario. I think a lot of venture capital investors have made reasonable returns from investing in the industry. We've seen how unicorns have evolved. We have seen how unicorns have evolved, for example, in the education space. We have Byju's, we have Oyo. We have a number of examples. We have the very talked about, much famous Walmart Flipkart deal. So I think value in the venture capital industry has gotten created for early stage investors. I wouldn't go so far as to say that in India the market scenario is not right. The trick, however, is in identifying which investee, which venture capital target is the one that will be able to capture the market and ultimately deliver returns, which is, I think, what the entire discussions for the 1 hour on our panel were all about.
Right. So you think that India is prepared for such kind of scenario where we see the right valuations?
So look, in venture capital, it's much harder to value companies as opposed to private equity. Private equity is late stage, mature companies. So you have benchmarks, you have multiples, you have cash flows that are evident. Venture capital is a little bit about taking a gut call, taking a judgment call, and the traditional paradigms of valuation, both in terms of cash flow and in terms of just profit-linked multiples, don't hold for venture capital. I think very interesting investments have happened in the venture capital space in India over time. I also think India has created a lot of very capable entrepreneurs in the Bangalore belt to start with, but now virtually all over the country, including in tier 2 cities. So valuation, I think, will always be fact specific and circumstance specific, but I do think that India can do with venture capital investing at scale.
If I want to ask you, what are your learnings from the Mint Annual Investment Summit?
So Mint does this annually. I think it's a great event because you try and cover in this investment summit all parts of the investing value chain. So we talked about distress, we talked about late stage private equity, we talked about problems in corporate M&A, we talked sectorally about real estate and infrastructure, and of course my panel where we debated venture capital. So I think it offers viewers and listeners a very interesting peek into all traditional and non-traditional aspects of M&A. And over 2 days, I think it's a great event. It's also a great opportunity to network. So I think it's a great event over 2 days.
On that note, Vivek, thanks a lot for talking to us.
Thank you.
So for more updates, stay tuned.